The next model entries will be related to calls in arrears and calls in advance. So I have already explained what is the meaning of this, but one thing, this model will be working out the interest rates separately. Okay, so for that there are a few things which I would like to tell you. So if the company has adopted table A of its articles, or the company's articles provide for it, then 5% per annum interest can be charged on calls in arrears from the date of amount was due till the date the amount is collected. So this is 5% will be for calls in arrears. Okay. If it is calls in advance, again the same thing. If the company has adopted table A, okay, then the interest at the rate of 6% per annum has to be paid from the date of receiving calls in advance till the due date of call concerned. So 5% for calls in arrears, 6% for calls in advance. In some cases they might not show it in the question. So in such case you have to remember and you have to work out the interest. Now we will work out sum number 22. It's in the page 1.114. On 1st January 1998, X Limited makes an issue of 10,000 equity shares of 10 each. Okay, so payable as given here, 2 rupees on application, 3 rupees on allotment, and 6 rupees on first and final call. You have to check here, see, 3 months after allotment. Okay, so this information will be useful for you to calculate the interest. Okay, the next one, they received 13,000 shares and directors made allotment in full to the applicants demanding 5 or more shares and returned the money to the applicants of 3,000. So received 13. So it is understood that 10,000 has been allotted full and 3,000 has been rejected. So one shareholder, listen carefully, who has allotted 20 shares, okay, paid first, and the final call with allotment money, and another shareholder did not pay the allotment money for 30 shares, but which he has paid with first and final call. Okay, so here you have to understand this 20 shares is calls in advance because he has paid it earlier. So we have to show this in entry. Now this 30 shares is calls in arrears who did not pay in allotment. So both in one sum. Okay. Directors have decided to charge and allow interest. So if this kind of sentence comes in, then you have to calculate the interest, as the case may be, on calls in arrears and calls in advance respectively, according to provisions of table A. So they are following provisions of table A. That means 5% on calls in arrears, 6% on calls in advance. Journalize the above transaction. Before working out this sum, I want you to go through the journal entries and then look into the answer. Now let us move on. So the first entry, so bank account debtor to equity share application. So we received 13,000 applications, so it is 26,000. Now rejection, okay, 10,000 into 2 has been allotted and this 3,000 shares has been rejected. So 3,000 into 2 is 6,000. So that has been rejected. So that entry. The next entry will be equity share allotment account debtor to equity share capital and securities premium. So they are issuing at a premium. So 2 rupees here and 1 rupee premium. Okay, so you have to be very careful here. Calculate and find out. See, how do you calculate is, totally in the question if you see, the total value is 10 rupees. They haven't mentioned premium here, but if you see in the question, application 2, allotment 3, that will be 5 rupees. Then first and final call 6 rupees. Then that means it is 11 rupees. So 1 rupee is extra. Face value is only 10. So you have to be very careful while going through the question. So 1 rupee is the premium and this is where the students make mistakes. Okay, so 10,000 will be security premium. The next one is the important part. Bank account debtor to equity share allotment and calls in advance. So here I'll explain with the help of a working note. See here. Now calls in advance. How do you calculate? Okay, so here 20 rupees as given in the question into 6, that is call money, that is 120. So 120 is the calls in advance. So now we have to find out first the allotment money. Okay, and we have already seen in the question that one person 30 shares they have made a default. So calls in arrears should also be shown here. Okay, so 10,000 shares, that is receivable, minus 30, so you are receiving only 9,970, that into the allotment money. So this is the amount which you will show regarding with the allotment, and this calls in advance also you have to show it here. So that's how I have shown here. See, yes. So this amount I have calculated separately with calls in arrears. I didn't show it as calls in arrears here, but I have shown it here. Okay, worked out. And calls in advance, if you want you can show it separately, and calls in advance I have shown it here, that is 120. So this both add up together will give you bank. The next entry will be simple entry, which you know. So 10,000 into 6 rupees, so 60,000. Now what happened? Calls in advance has to be adjusted here. So I have just added it up here. Again I have a working note, I'll just show you. This is working note 2. So call money due, so that is 60,000. So minus, you have to adjust the call now. So you subtract that 120 and this will be the amount. Okay, call money. So call money plus this 90 rupees. What he is doing, that 30 into 3 rupees, that is allotment money which he has made an arrear, he is paying it up here. Okay, so 90, that's why I am adding up 90. So this is the amount which you have to show, because he has made a default during allotment, but in the question they are saying they are paying it during calls. So this amount should be shown. So if you see I have bank account debtor, I've added 90 and I've shown here. Calls in advance 120, first and final call, that is 60, and equity share allotment I am making an adjustment here. Okay, I'm showing it separately. If you want you can show it here. So this is the balancing figure. Now next one is interest calculation. That is actually very simple. So you know the entry, interest on calls in advance account debtor to sundry shareholder, that is sundry member is the shareholder. So how do you calculate? So interest here we know that is 120. Okay, 120 is the amount, right? So 20 into 6 rupees, that is 120 into 6%. If it is calls in advance, then it will be 6%. 6% into 3, that is, see, in the question they have given, no, 3 months after allotment. So after allotment you need to calculate. So 3 into 12. So that's why you are getting 1.80. So this is the interest. And now we have to pay the interest money, no. So sundry member, that is shareholder account debtor to bank. So this is calls in advance. Now we need to calculate the calls in arrears. Okay. Now calls in arrears will be sundry member, that is sundry member account debtor to interest on calls in arrears. Here it will be credited. So now we need to calculate 30 into 3, that is 90 rupees, into 5 rupee, 5%. 5% is the interest percentage for calls in arrears into the same 3 months after allotment you need to calculate, because during calls he is making the payment. So after that, so 3 you have to calculate, and 1.13 is the interest for calls in arrears, which the shareholder has to pay the company. So it will be bank account debtor to sundry member account. Okay, that entry alone you have to include here. So are you able to understand? So just go through the working note. So this is working note 1, this is working note 2. Okay. So this is both. This is a model which has calls in arrears and calls in advance.